You hear people talk about the global economy all the time. They throw around words like GDP and inflation, but what does any of that actually mean for you? Well, it turns out the global economy isn't some far-off, abstract thing. It's actually the hidden machine running behind the scenes of your everyday life.
Ever find yourself at the checkout line just wondering why your grocery bill seems to creep up every single week? Well, the answer isn't just in your local supermarket. It's part of a gigantic global system that connects a farm, say in Brazil, directly to your dinner table.
And what about bigger things, like the interest rate on your mortgage or a car loan? Why do those numbers seem to go up and down? Yeah, that's not just your local bank making a decision. That's the global economy reaching right into your wallet.
And that's really the key to understanding all this. It's all one interconnected system. A decision made in a factory in Vietnam can change the price of a car in Detroit. A disruption on one side of the planet can mean you can't get a new refrigerator on the other. Everything is connected. And once you start to see how, the world, well, it starts to make a whole lot more sense.
Okay, so to really get this system, we have to start with the most basic piece of the puzzle. How does the world actually trade stuff with itself?
It all goes back to this really simple kind of old-school idea called comparative advantage. And the logic is super straightforward. Countries should just focus on making the things they're really, really good and efficient at making. And then, for everything else, they just trade with other countries. It's basically the original work smarter, not harder. But of course, in our modern world, that simple idea has become, well, incredibly complex. Just take a look at the journey of the smartphone that's probably in your pocket right now. It is not made in one place. It's designed in California, its high-tech chips are made in Taiwan, other critical parts come from Germany and Japan, and then it's all put together in China before it ever lands in your hand.
And this isn't just about phones. These incredibly complicated production networks, they're called global value chains, now account for a staggering 70% of all international trade. So this isn't the exception anymore. This is the new normal.
And this quote just nails it. It really gets to the core of the whole thing. Products don't really have a single country of origin anymore. They are quite literally products of the entire world. And this amazing web of interdependence, it's both the system's greatest strength and, as we've seen, its greatest weakness.
So if that's how the system works, how do we keep track of it all? How do we know who's doing well and who's falling behind? That brings us to what you might call the global scorecard. The biggest number everyone talks about is gross domestic product, or GDP. The absolute easiest way to think about it is like a country's annual report. It's the total value of every single thing, every product, every service that a country produces in 1 year. If that number's going up, that's usually seen as a good thing.
But what's really fascinating right now is where all that growth is actually coming from. I mean, look at this chart. You can see the so-called advanced economies, like the US and Europe. Sure, they're growing, but it's pretty slow. The real action, the high-speed growth, is happening in emerging markets and low-income countries. The entire economic engine of the world is shifting south and east. But, and this is a huge but, there's a massive catch. A country's GDP can be going through the roof, but that number tells you absolutely nothing about how that new money is being shared. You can have a booming economy on paper while millions of people are actually getting poor. So GDP is a useful number, for sure, but it never, ever tells the whole story. Now, this whole global system of trade, it doesn't always run smoothly. There's friction, there are arguments, and that brings us to the stuff that complicates things. Taxes, tempers, and the one currency that pretty much rules them all.
So let's start with a word you've probably been hearing a lot lately, tariff. All a tariff is, at its core, is a tax. It's a tax a country puts on stuff it imports from another country. Now, the official reason is usually to protect local jobs and industries. But what almost always happens in practice, it just makes things more expensive for you, the person buying stuff.
So how much more expensive are we talking about? Well, one study figured that recent tariffs ended up costing the typical American household about $1,700 a year. So, see, tariffs aren't some abstract government policy. They're basically a direct tax on your wallet.
All right, next up, the US dollar. For decades, ever since the end of World War II, the dollar has been the world's go-to currency. It's seen as the most stable, the one everyone uses for huge transactions, like buying oil. This gives the United States and its central bank, the Federal Reserve, a crazy amount of power. I mean, just look at this quote. A simple interest rate decision made in Washington, D.C. can literally spark a financial crisis on the other side of the globe. And this chart, wow, it really drives that point home. As you can see, the vast majority of global trade is done in US dollars. It's the financial bedrock that the entire global system is built on, at least for now.
So where does that leave us right here, right now? Well, we are living through a massive pivot. The global economy is going through something that people are starting to call the Great Rewiring.
For decades, the name of the game was simple. Find the absolute cheapest place in the world to make something. That was it. That was the goal. But that's the old playbook. The new goal is completely different. After all the shocks from the pandemic and rising geopolitical tensions, companies and whole countries are now focused on building the most secure and resilient supply chains. This means doing things like nearshoring, moving factories closer to home, or friendshoring, only trading with countries you trust. It's a huge shift from prioritizing efficiency to prioritizing security.
And this whole rewiring is happening at such a critical moment. Because look at this number. Over the next decade, 1.2 billion young people, mostly in developing nations, are going to be looking for jobs. Where are these new, secure supply chains going to be built? Who's going to get those jobs? This is, without a doubt, the single biggest challenge the global economy is facing.
Okay, so let's just boil all of this down. What are the big things to remember? Number one, everything is connected. Number two, all this trade creates a ton of wealth, but it also creates deep vulnerabilities. Number three, tariffs are almost always just taxes that we, the consumers, end up paying. And finally, the dollar is still king. But for how much longer?
So look, the real takeaway here is this. The global economy might seem super complicated, but it's not just some random, mysterious force. It's a system. It has a logic to it. And understanding that logic is honestly one of the most powerful tools you can have.
Because right now, as we speak, the rules of that system are being completely rewritten. The entire architecture of how we trade and use money is changing faster than it has in generations. And that leaves all of us with one really big question. Who is going to write the next chapter?